wherever you are and whatever time you're listening to this. Good morning, good afternoon, and good evening. This is a special edition of the Market Color Podcast, where we're going to be sharing with you an annual review of the financial markets in 2025. This will entail a brief overview of the major financial headlines which dominated the financial markets throughout last year. The global financial landscape in 2025 was defined by a series of historic pivots and unprecedented volatility. Whether it was the Trump tariffs redefining global trade or record-breaking asset prices driven by AI stocks, or the flight to safety that pushed gold into record highs, or even the aggressive easing of monetary policy by the major central banks, there is indeed a lot to unpack for 2025. And therefore, without further ado, ladies and gentlemen, please grab yourself a cup of tea or coffee and take a comfortable seat. Because this here is episode number 193, and this is your host, Jamhuri, and together, let's dive right in. We begin with an executive summary of 2025. If I had to sum up 2025 in a single word, it would be volatility. Globally, the year was dominated by the return of President Trump to the White House and his aggressive tariff-led agenda, which sparked trade wars with America's major trading partners, but in particular with China, Mexico, and Canada. This uncertainty drove a massive flight to safety, leading gold to break above $4,500 per ounce. Meanwhile, the U.S. Federal Reserve finally shifted from a higher-for-longer policy stance to a series of rate cuts as the U.S. labor market began to cool down. And back at home in Kenya, 2025 was the year of monetary easing. In an attempt to counter a sluggish economy and high interest rates, the Central Bank of Kenya embarked on an aggressive easing cycle, cutting the central bank rate from 10.75% in February down to 9% in December. Despite massive debt pressures, with the national debt hitting 12.05 trillion shillings, the Kenya shilling remained remarkably stable at around 129 shillings per dollar. This stability sparked a heated debate with the IMF over whether our exchange rate was truly floating. We also saw landmark corporate deals, including the government's plan to sell a 15% stake in Safaricom, plus Diageo's exit from East African breweries, and a strategic debt swap from dollars to yuan in order to reduce on the cost of servicing our national debt. Up next is a review of the months of January and February 2025. We started January with a momentous shift in Washington as President Trump's inauguration brought about a 25% tariff on Mexico and Canada and a 10% tariff on China. Global markets were on edge, fearing a spiral into stagflation where growth stalls, but prices continue to rise. The tech sector wasn't spared either when China released the DeepSeek open source AI model which caused Nvidia to lose a staggering $600 billion in market value in a single day as investors began to question the need for their expensive GPUs, which are critical for artificial intelligence. In Kenya, the year began with a ray of hope as Moody's upgraded the country's outlook to positive, even though their credit rating remained at the same level. The Kenya shilling stood firm in a narrow range of between 129.25 to 129.54, supported by record high diaspora remittances, which reached nearly $5 billion in 2024. In February, the Central Bank of Kenya took its first big step to help the private sector, cutting interest rates by 25 basis points to 10.75% and reducing the cash reserve ratio by 100 basis points to 3.25%, which provided an additional 57 billion shillings for lending to the private sector. Globally, it was a tale of two assets as gold hit record highs above $2,950, whilst Bitcoin suffered a massive crash, falling below $80,000 after a computer hack of $1.5 billion on the Bybit exchange. Up next is a review of the months of March and April 2025. March 2025 will be remembered as the month that gold broke above $3,000 for the first time in its history. Safe haven demand broke through the roof as the U.S. national debt surpassed $36.2 trillion. In the domestic markets, we saw mixed signals as KCB Group reported a massive 66% jump in profits to hit an all-time high of 60 billion shillings. However, there was a sting in the tail as Kenya missed out on an IMF tranche of $850 million, mainly because the Treasury failed to meet its revenue targets. On a brighter note for retail investors, Safaricom's ZD Money Market Fund was proving to be a disruptor as it attracted about 6 billion shillings in just 4 months. By April, the trade war initiated by the US was getting even hotter as the US hiked tariffs on Chinese imports to 145%, and China retaliated with tariffs of 125%. This friction caused the US economy to contract by 0.3% in the first quarter of 2025. In Kenya, the central bank stepped up its game with a massive 75 basis point rate cut, bringing the central bank rate down to 10% flat. This was an aggressive attempt by the regulator to jumpstart lending to the private sector. In the meantime, food security was also in focus as the government waived import duties on yellow maize in order to keep the price of maize flour from rising even further. Up next is a review of the months of May and June 2025. May was a historic month for digital assets as Bitcoin finally smashed through $100,000, eventually peaking at $112,000, and as Coinbase joined the S&P index. But it wasn't all celebration as Moody's downgraded the United States credit rating, citing its massive national debt of $37 trillion. In May, Kenya's inflation cooled down to 3.8% and Safaricom reported a solid profit, with M-Pesa contributing about 42% of its total revenues. However, the World Bank warned that Kenya was still at a high risk of debt distress, with 86% of revenues being consumed by interest and recurrent expenditure. June brought about geopolitical drama that shook the energy markets as airstrikes in the Middle East caused oil prices to jump above $77 per barrel. However, just a week later, a ceasefire deal was brokered by the United States, which caused oil prices to crash back down to around $67 per barrel. Meanwhile, the Kenyan government unveiled a record budget of 4.29 trillion shillings, with a budget deficit of about 923 billion shillings, which the Treasury plans to fund mainly through domestic borrowing to the tune of about 635 billion shillings. This borrowing has raised concerns that the government could crowd out the private sector, as banks would rather lend to the government than risk defaults with the private sector. Up next is a review of the months of July and August 2025. In July, the global narrative shifted towards a potential recession as the US labor market added only 73,000 jobs, which was far below market expectations and raised the probability of a September rate cut by the Federal Reserve. Meanwhile, the Kenyan government was busy servicing debt in July as it paid out a total of $531 million, out of which about 81% was spent on servicing the debt incurred on the standard gauge railway. But despite this pressure, the Kenya shilling remained suspiciously stable at 129.24 versus the US dollar. August saw the official pivot in policy as the Fed Chairman Jerome Powell signaled at the Jackson Hole Symposium that rate cuts were in the pipeline. This news sent the Dow Jones to new record highs and pushed gold to above $3,400 per ounce. In Nairobi, the Securities Exchange was on fire, gaining more than 1 trillion shillings in market capitalization over the past 12 months. Meanwhile, government bond yields continued to fall as investors shifted their investment from bonds into blue-chip stocks such as Safaricom and Equity Bank, driving the stock market to a 3-year high. Up next is a review of the months of September and October 2025. September was the turning point as the US Federal Reserve delivered its first rate cut of 2025 and as gold hit a new high of $3,790 per ounce. However, investors were cautious as the Buffett indicator, which compares total market value to GDP, hit an unprecedented high of 220%, suggesting that the stock market was dangerously overvalued. In Kenya, the shilling remained stuck at 129.24 for 7 consecutive weeks. And to fund the budget deficit, the Treasury announced that it would source 68% of its borrowing from the domestic market, further raising concerns about the availability of credit to the private sector. Then came October, and the US government shutdown for what eventually turned out to be the longest shutdown in US history, which lasted for 44 days. This created a data blackout, leaving investors to fly blind during this period. And in the ensuing chaos, gold broke above $4,000 for the first time. In the meantime, Kenya made a brilliant tactical move in October, converting $3.5 billion of SGR debt from dollars into Chinese yuan. This de-dollarization swap is expected to save the country about 28 billion shillings per year. Kenya also passed the Virtual Asset Service Providers Bill in October, bringing some law and order into the crypto sector. Up next is a review of the months of November and December 2025. As we entered the final stretch in November, the US government shutdown finally ended, but Bitcoin saw a sharp correction, dropping to about $82,000 as investors fled from risk into safe haven assets. In Kenya, the IMF raised alarms, arguing that the shilling was behaving like a fixed exchange rate, which could affect the transmission of monetary policy. Meanwhile, Kenya's debt hit a staggering level of 12.05 trillion shillings as commercial banks continued to struggle with non-performing loans that were valued at 732 billion shillings, which is about 18% of the total loan book in the banking sector. Finally, December brought the year to a close with more monetary easing as the Federal Reserve cut policy by 25 basis points to a range of between 3.50% to 3.75%, whilst the Bank of England also cut by 25 basis points to 3.75%. And as interest rates declined, gold hit a new record high above $4,500 per ounce. In contrast to other central banks, and as domestic inflation continues to rise, the Bank of Japan decided to raise its policy rate to 0.75%, which was its highest level since 1995. In Kenya, the year ended with a big bang of corporate activity as the government announced the sale of a 15% stake in Safaricom to Vodacom Group in a deal valued at 244 billion shillings. In related news, Diageo plc sold its entire stake of 65% in East African breweries to Japan's Asahi Holdings in a deal valued at $2.35 billion. And to top it off, Safaricom, in conjunction with the Nairobi Securities Exchange, launched what they're calling Zidi Trader, which is a platform that provides retail investors with direct access to the stock market, enabling them to buy and sell shares using their mobile phones. So, what is the outlook for 2026? According to reliable sources, 2026 will be a year of steady but cautious growth. The World Bank projects that global growth will be stable at around 2.4% as the global economy digests the trade disruptions of 2025. However, Goldman Sachs is more optimistic, forecasting global growth at 2.8%. According to Goldman Sachs, the U.S. economy is expected to outperform at 2.6% as tax cuts kick in and the drag from tariffs reduces. China's growth is expected to hold steady at 4.8%, driven by strong growth in exports despite weak demand at home. For Kenya, the focus remains on the national debt, which, despite repeated commitments to fiscal consolidation, the national debt continues to increase at an alarming rate exposing a widening gap between policy intentions and implementation. According to the International Monetary Fund and the World Bank, Kenya remains at a high risk of debt distress and is currently off track in terms of its debt to GDP ratio, which currently stands at 64% compared to its targeted rate of 55%. But just to close on a positive note, we expect more creative debt management and financing strategies from the Treasury and a continued push towards financial inclusion that will bring more retail investors into the financial markets through digital innovations. 2025 was indeed an incredible year of resilience and transformation, and we want to take this opportunity to thank you for staying with us throughout 2025, and we look forward to your continued support in 2026. Just for your information, the Market Color podcast is hosted by Buzzsprout and is also available on all the major distribution channels such as Apple Podcast, Spotify, and Amazon Music. And for a summarized text version of this podcast, please check out the Market Color newsletter, which is available on LinkedIn. And once again, just for your information, we are launching an interview format of this podcast. So if you'd like to be a guest on this podcast, or you have an idea of a guest whom you would like me to interview, please feel free to reach me on the following email address. That is jamuhuri@gmail.com. Jamuhuri spelled Jamuhuri. Once again, thank you for listening to the Market Color podcast and for your continued support throughout the years. I look forward to interacting with you again next week. And in the meantime, please do have yourself a blessed and fantastic year ahead. And remember, life is like riding a bicycle. To keep your balance, you must keep moving. A quote by Albert Einstein. Think about it. Thank you, and God bless.